Most Singaporeans would have that dream of being debt-free.
Yeah.
But I don't agree. Money is on our mind, but we're not mindful about money.
Niao like xiao.
Yeah.
The niao is what?
Niao-
Very niao.
I'm better now than when I was at 18, 19 years old.
Because all failures is all a learning
Of course.
curve much.
If they got insurance for free, they would take it. We are taught so many different subjects, but we don't teach financial planning.
Insurance actually is one of my strategy in property investing. So,
People buy things that they don't need
okay.
with money they don't have to impress the people they don't like. Too many people are making mistakes like this. They buy a Labubu.
Most people think they understand money until their first property decision determines the next 5 to 10 years of their financial freedoms. They do everything right, they work hard, save hard, spend responsibly, but somehow they still feel stuck because no one ever taught them how property decisions shape long-term freedoms. Let me share a real example. One day after a class, one of my participants came up to me. She's 32 years old, married with 2 kids. One is 3, the other just 1 year old. She told me, my husband and I are saving very hard for our kids and we just want to make sure we do the things right. Their plans was to fully pay up for their next property after MOP. No stress, no risk, very responsible. And on the surface, that actually sounds like a great decision. But when we unpack it, that single choice will quietly limit their options for the next 10 years, especially when it comes to flexibility, upgradings, and long-term financial freedoms. This is where I think education really matters. From your perspective, why do so many young families believe this is the safest move? Today, we are breaking down what that decision is, and more importantly, how to avoid it and what exactly is going on. Hi everyone, I am Ernie, and welcome to the very first episode of this podcast. This podcast isn't about quick wins or motivation, but is where I share my journeys and also invite people to come in to share their experiences. Sometimes we will need to understand why some decisions we make will move us forward, while some hold us back. Today, I'm here with a close friend of mine who is doing something really meaningful for our younger generations. He runs Niao Like Xiao on TikTok, where he talks about money, investing, and everyday financial habits, but in a way that actually makes sense and doesn't feel scary or complicated. And what I really respect about him is that he's not just teaching finance. He's doing his best to teach financial literacy, media literacy, and digital literacy, and all of it. Because he sees the quality of contents for kids and young people going down, and he genuinely believes there's some things we can do about it. So if you ever felt confused about money or wonder how the decisions you make when you're young affect your future, Melvin's the kind of people who help you see things more clearly. So everybody, let's welcome my good friends, Melvin. So hey buddy, happy to see you here. So when was the last time that we are in our military police training first?
It was, I enlisted 2002 June, so that means that's 2002, not 2022.
2002.
Yes,
so that's 24 years back.
ago. That means I would have met you maybe in September, October or so.
That
right?
period.
Yeah.
So then,
It's crazy.
20 over years.
Yes.
I look at the camera here. I also find that my face is more round now. But that's how life move on, right? But you're still looking good, so it's inspiring.
Thanks.
It's
No,
good.
in fact, I like to think that I'm better now than when I was at 18, 19 years old.
Well, there is something for me to catch up from there. But along the journey, we also cross path during the met up in Launchpad.
Yes.
Do you remember?
When we were in startup scene.
So that was my also another startup environment.
Wow.
But it didn't kick off well for me.
Oh.
So it was a few business I've been running, but it didn't work out well for me.
Nor did mine, as in our company.
Yeah, but over the period, then you have been doing a lot of inspirations to a lot of people, the young ones.
I hope I inspired some people.
You created,
But at least influenced a bit.
yeah, but you created a channel, right? Actually, in TikTok.
In TikTok.
Then sharing about people about financial literacy,
Yes.
digital literacy, and media literacy.
Not enough of the second and the third one, but I think I shared more financial literacy. not so much on the real specific money planning kind of content like a lot of other influencers do, but if you notice, it's all about being aware. So it's still literacy. It's financial
Okay.
literacy, not financial planning, I think. I run a small channel on TikTok called Niao Like Xiao.
Niao like xiao.
Yeah.
The niao is what?
Niao,
Niao.
it's okay. So a lot of people would think that Niao is stingy. I think that's the best way to translate.
But that's also
it,
my first
right?
reaction.
Niao, right?
Yeah.
I think to me, Niao is about being selective.
Oh.
It is about being aware of what you're saving money on. You want to be niao, you want to save money, you want to be prudent, but not 寒酸,
Oh, so
but not miserly.
so your niao got different meaning.
Yes, I think there is a slight nuance.
Not the traditional niao where you find that wow, you're so
you're
stingy,
nitpicking.
you're so
No.
but you're talking about thrifty anger.
Yes.
Talking about maybe smarter investing anger.
Smarter decisions.
Oh,
yes.
so there's a niao version of niao.1, niao.2, niao.3.
Yes. I
Oh,
think
so you
it's
break it
now
out.
a version higher. Yeah.
So who do you really serve? Like who are the group of people that you really serve?
The people that I'm looking to educate are late millennials.
Okay.
And the younger people.
Okay.
Because I really agree, I really think that, you see, in school, especially in Singapore, where we are taught so many different subjects, and then, kids would say, oh, I'm never going to use this, apply this in my work. Why am I learning calculus anyway, right? But the irony of things is we don't teach financial planning. We don't teach them how to think about spending money.
Okay.
Which is why we see a lot of consumerism. I think that gets to me,
Okay.
I'm really angry when people start spending money on silly things.
But what are silly things they're referring to? Things that they don't want, or things that they want. As a wants versus needs thing.
Something like that. I think to summarize it, it's something like a lot of people buy things that they don't need
Okay.
with money they don't have to impress the people they don't like.
Oh, that's a key point. Impressed.
Right? I think that's the key. That's the big peeve that I have with people. The way people spend money.
Okay.
Right.
I heard about this marketing perspective. The branded companies are actually targeting for people who don't have the money, but they want to impress people.
Exactly.
So they target on people that really wants to buy to impress others.
Yes.
So these are the group of people that you probably want to reach out and then to share with them your perspective about financial
Yes.
literacy angles.
Which, if you think about it, applies to a lot of people, right? A
Ah,
lot of people.
okay.
I think too many people are making mistakes like this in spending their resources.
Okay.
Yeah.
But is there a specific areas that you are guiding them? I mean, you give the alert level of what are the things not to do, but is there a vertical of like investment
What
pots
to
to go?
I'm firmly in. You see, just a bit of context. I used to be a financial planner.
Oh, okay.
Used to be.
Yes, correct. Okay.
I forgone my license a long time ago.
Okay.
But I still believe in having a sequence to financial planning. Meaning, first you build up your war chest, your emergency funds. Take note, emergency funds first. Once you have that, you protect those funds with wealth protection, which is insurance. As much as a lot of people don't like insurance, but what is it they don't like? If they got insurance for free, they will take it. They like insurance, but they don't like how it's being sold to them. So I think insurance is still the key to building your life.
Can I share with you this insurance partner?
Sure.
Actually, it's one of my strategy in property investing. So I usually share with my community folks. Actually, when I did share very openly how to use good debts to go and buy assets.
Yes.
Because assuming debts there are interest that you need to pay.
Yes.
Let's say now probably about 1.5% interest rates.
Yeah.
But if you put it into the assets, giving you 5 to 6%,
6%.
it does make sense.
Yes.
But the thing is, there's still debts coming up.
Yes.
So every time I accumulate my property, every year on January,
Yep.
we'll sit down with my FA
Planner.
and then they will start restructuring the whole thing.
That's
How
amazing.
much debts I have.
Yeah.
But every time I increase debts, I actually get insurance to protect on my downside.
Yes.
But the thing is, this is one thing that I share with people, my perspective.
Yeah. I 100% agree.
And this perspective is, I don't know whether is it different, because I have a lot of friends when they buy, let's say, property, their intention is to pay all one. Don't want to have any outstanding loans one. So they live debt-free
I have
legacy
friends
journey.
like that as
So that was the journey that most of the people wanted.
Yeah.
But actually, to my perspective, right, as long as the investment makes sense, and it does give you the cash flow, everything, and you still have tons of debts, right? Actually, you use insurance to protect you. If anything happened in life, right,
It's paid off.
it's pure legacy
Yes,
planning.
it's pure legacy.
It's pure legacy planning.
Yes.
So it's one of the strategies that I use
Absolutely.
to protect my assets.
Absolutely. And on the thing about debt, right? A lot of people, like what you mentioned, most Singaporeans would have that dream of being debt-free.
Yeah.
But I don't agree. I share that philosophy with you on using good debt, right? No other institution, or there is no other instrument that exists out there that people are willing to lend you hundreds of thousands, if not millions of dollars at such a low interest rate for such a long time. So obviously, to me, in my very simple mind, it's really to stretch this as long as I can, to borrow as much as I can.
Yeah, me too. I also stretch, especially for my residential unit. I always tell my friend, they have to stretch to age 75, maximum stretch. But as long as your insurance are covering the outstanding debts, we are quite okay.
Yes.
No matter what happens,
Absolutely.
it's all covered.
It's
for the
all
family.
covered, yeah. And your family is not going to struggle with it.
Yes.
Right? You want to make sure that your family does not, you leave behind a legacy, not leave behind a liability. Right? So I think that is the key thing about using insurance. Yeah.
So that's what you've been doing for a period of time.
Yes.
For
Yes.
how many years you're involved?
I was in financial planning for a good 3 years.
Okay.
Just not too long ago, I just left a previous company which was also serving the financial planning industry.
Okay.
But this time, through a mentor and as well as the founder of the company, we trained financial advisors to better run their business, do well by doing good. Right? And in there, I learned many principles of financial planning, and I wanted to share a bit more.
So that's how you started the TikTok.
Yes.
And then start sharing with people.
Yes. On top of some weird things, some wacky things that I thought of myself.
Then out of all the so-called the investment vehicles,
Yes.
actually which one is the ones that resonate well for you?
Which is next step in that order, right? Emergency funds, wealth protection. The next one is actually really to start to build up your investment portfolio. Really.
Okay, investment portfolio.
Yes. And this is the money that you'll be using to retire. To me, I like to keep it stress-free. I like to keep it emotionless.
Okay.
I highly resonate with the notion of going index funds, broad index funds, no plan, no portfolio allocation whatsoever, and just putting it in there, rain or shine, happy or sad, just put your money in there on a monthly basis, weekly basis, whatever it is, on a regular basis.
So do you have like different jar in your life? So for example, some of the people they practice this
6
thing.
jar.
Depends.
Yes.
Some of them 3 jars, some of them
jar,
6
6
jar,
jar.
whichever jar.
Yeah.
Some of them is like saving jar.
Yeah.
Then they put investment jar.
Investments.
And then the other one is fund jar.
Yes.
Do you practice this kind of jar system?
What I do practice is a bit of a modified 6 jar method.
6 jar.
Yeah,
Wow,
6 jar.
6 jar.
Necessities.
Okay.
Necessities. Let me recap, but because this is such a long time since I planned for myself, right? But it's all on autopilot. That's the thing I like about financial planning. Planning means you want to create this kind of structure for yourself, right? So one is for necessities. One is for my long-term investments, meaning my retirement fund, right? I put about 10% in there on a monthly basis. Just throw my money in there. Low-cost index funds, don't think about it. Just put the same amount, right? And I increase that amount as my pay goes up, right? The next one would be my short-term savings.
Okay.
Because sometimes you want to plan with your partner or you plan with a family a long holiday, and then you want to have a bit more extra down,
Okay.
right? That's a short-term savings. And you want to have a fund that you invest in yourself by learning. So I think investing in learning is a rare thing.
Wow, that's crucial, man.
Yes, that's crucial.
crucial for me.
That's crucial for me as well.
Yeah.
But the learning may be different avenues. It may be subscribing to someone's Substack,
But you're not referring to academic stuff, right?
No. Okay,
That is to
Yes.
state it clearly. What is your learning
I think
perspective?
for everyone is different. For everyone is different. Some people, they may think that their job will benefit from an MBA.
Oh, using academic model. Okay.
And MBA and EMBA furthering their studies into having a doctorate in wealth management, for example. Right? Go for it, but plan for it. Nowadays, not many people read books, but yeah, subscribing to higher quality content, Substacks, bettering a skill that you want to develop in, courses. And the best thing is Singapore already takes care of that for most of us. Right?
Okay.
So that's the study, the learning,
Okay.
and playing.
Okay.
I think a part of it has to go towards enjoying
part,
yourself.
lah.
The fun
Yeah.
part. No,
Like travel and all.
yeah, all work and no fun makes Jack a dull boy.
I also did the same thing for the travel parts.
Yes, have to.
So my wife is actually the driver for that.
Oh,
Because she know that I'm actually busy in my business.
Yes.
And she actually allocate a certain amounts to our travel funds.
yeah.
So every journey that we build out in our wealth creation,
Right.
a portion actually goes to travel. And that travel means, right, we really spend a
Go
lot.
all out.
Yeah, go out
Go
just to have
all
fun.
out.
Actually, you will create the memories for my kids.
Oh,
So
absolutely.
when they grow up, they will still think that, actually, our daddy, I still remember the travel. But they couldn't remember that we have what lunch 1 week ago. They couldn't
course.
remember.
Yeah.
But they remember all the travels that
Yeah.
we've gone through.
It's a significant milestone for them.
Yes.
Right.
But I also noticed that you have been creating a lot of education,
Yeah.
informations to people, financial literacy,
Yep.
especially the young one.
Yeah.
So what are some of the common things that the younger folks, maybe younger than
Yep.
30 years old,
Yep.
so what are some of the perspective of their financial point of view?
I think there is a bit of despair.
Despair, what do you mean by despair?
Okay, so there's this phenomenon that everything is getting so expensive. Cars are getting
Yes.
expensive.
Yes.
Housing is expensive.
Yes.
Right? That they decide to, hey, screw it. I'm not going to afford a house anyway.
Is there a conversation of the Tang Ping like that?
Yes, it's kind of
Really?
It's exactly like that. But it applies to not just in China because it was a Chinese phenomenon,
Yes.
right? But it's also in the US. It's also in basically it's also in the Western world, and I see that happening in Singapore as well.
Is it happening?
So when I look at Reddit, right, a lot of people are feeling hopeless about the housing situation, and I think because of that, they can't get that big win, so they aim for the small wins. A small win meaning they go to
What, chill out, have fun?
not
Is
even
that what they want?
not even have fun. What's that? You know what's that? Pop Mart.
Oh,
They go to Pop Mart. They buy a Labubu, and they hope to get that hidden one.
oh.
And they get that, and then they cheer about it. They talk about it.
So you mean that the wins of an individual have shifted?
Yes.
Instead of, I don't know, our era, I think.
Yeah.
You know, my era, I'm in my 40s now. My wins are still building assets.
Exactly.
Building business.
Exactly.
That's still my wins.
I think it's also the circumstances. People who are around our age or maybe slightly older, the people who are slightly older have a huge advantage, had a huge advantage over us in the sense of regulation, banking regulation.
You mean what? It's not as
Loans.
high as compared?
As compared to now.
Oh, okay. And the regulation has changed.
2013, there was no cooling measures.
Oh, I see.
Right.
Like ABSD. and all that
ABSD.
stuff.
I knew people who would be able to get a equity term loan on a house and immediately using it to buy the next
Yeah,
property.
so they can take out cash out and then buy another
Take
property.
cash out, buy a next property.
Okay.
Wait another 3 months upon completion to get another house because they buy something.
Last time also
undervalued.
don't have SSD, seller stamp
Yes,
duty.
no SSD.
Buy, you can
Yeah.
flip the property.
Exactly. So I know of cases where people are buying multiple properties within months.
I see.
Yeah, because they knew how to select an undervalued property. They went for it, and they can snowball from there. For our generation, it was a bit more difficult. We went into the market, for me at least, after the cooling measures, after the buyer stamp duty, the additional buyer stamp duty, the seller stamp duty, etc., etc. Right, and now it's even worse. prime plus the HDB conversation, right? Waiting 10 years to get your money out. Yeah, sure, you're going to double your money in 10 years, right? Especially if you get a super good location. But
there's
the
one
fact-
concern
it's
is
10 years.
about the timeline.
Yes.
By the time for people younger ones, if you don't go for the 10 years, but building also take time, so
Yes.
maybe think about
Yes.
4 years.
4 years.
Then you
Now they say 3.
10 years, then
Yeah.
it's about 14 years.
Yes.
So it means that if you are at a very young age,
Yeah.
let's say maybe 30s,
Yep.
and then by the time you complete everything, so by the time you reach about my age,
Yeah. 40.
my
Yeah.
age, then you
Yeah.
probably start your journey.
Yeah. And you see that's the snowball. That's the snowball effect. Last time you could profit from a property transaction within 5 years with a normal MOP, even if you have a solid location. 5 years. The next snowball, if let's say you went to a private, you're probably going to sell it within 2 years, 3 years, even snowball again, all around. Now, the stamp duty, the seller stamp duty is for 3 years, right?
4 years.
4
Residential
years.
is 4 years.
So you minimum, at the minimum, you have to wait for 4 years. I mean, if it makes sense for you before that, then go ahead lah. That's for private. But for HDB, no way.
But then, for your perspective, right? Then does HDB design for investor angle, or you think it's for, don't know, personal usage?
You see, this is the time where I share my circumstance. Not exactly circumstance lah, but it's more like I feel that HDB is a choice of convenience.
Convenience.
Everyone wants a home.
Fair enough.
But how you get the home and where you get it from is down to only one thing. How much do you have right now?
You need the resource.
The resources you
Okay,
have,
okay.
right? Maybe some other things lah, like is it near your parents? But come on, how many neighborhoods do not have a single condominium there, right? And we can say that yes, Singapore has a super high standard of public housing, which is amazing, which is the triumph of the Singapore system, right? And I stay in an HDB.
Okay.
I stay in an old HDB.
But why do you make a choice to buy the older one?
Okay, so that was that's why I see it as a choice of convenience. My parents stay in the next estate. Just the next estate. We are just separated by one minor road.
I see.
Right? And it seems very unlikely for my parents to move really.
Okay.
Right? So I wanted to get something near them, but not so near that they would come over and intrude into my time.
Oh, I
right?
see.
Even though it's really near, I can. If you challenged me, I could crawl to my parents' place.
Okay.
Right? So I wanted to get that estate. And at that point in time, I did my analysis. I thought about it. It's convenient. I like the lifestyle over there. It's quiet, but not ulu.
Okay.
It's accessible, but not noisy.
So you see, you get a house that is based on personal needs.
Yes.
But do you think it's a smarter choice in investing?
Yes. The choice that I would go for anytime would be to buy a condo. In fact, there are two nice condos in that area.
Okay.
Right.
So there's a private housing that
Yes,
you can
there
consider.
are two over there. But they are very old, and I didn't think that it was a good price then.
Okay.
Not to mention that I didn't have enough funds for that purchase at that point in time.
Okay.
Yeah, because I'm buying in my own personal name.
I see.
Right.
So that was the restriction that you think.
Yes.
I see.
And I mean, for everyone else out there who has that kind of funds, I would definitely, if I were to dictate what you do, is go condo, go private.
So you see, so if we are able to go back to our younger self, let's say 25 years old, and you gone through what you gone through.
Yeah.
So what do you think that you would do in terms of property then?
In terms of property,
Yeah.
I would go for it early.
Go early.
early.
Go as early as you can.
As early as you
Okay,
can.
so everybody go as early as you can.
Yes. And because the key here is in the time value of money formula, the biggest impact is the end, the power of time. Time is the biggest multiplier that you can get in wealth, in terms of wealth.
Actually, I want to share with everybody there's a formula that you probably can consider.
Yeah.
You know, in property, right, there's one thing that the best friends in property is actually known as inflation. So you see, if a person is working very hard and they save money into the bank, the inflations will kill them.
You're losing money.
Yeah, they're losing money.
Yeah, it's a guaranteed loss.
But in property, it works the other way around. Actually, the highest inflations flow, the properties will move to the highest one.
Absolutely.
And I use this thing called the rules of 72.
Okay.
And it means that if I use 72 divided by the inflation
Yes.
percentage, let's say 4, it means that in 18 years, right, your property will probably double. So go and do the backdate test.
Yeah.
Now it's 2026. 18 years back is 2008. You probably have half the value today.
Oh,
So there's a formula
Even lower,
behind.
right?
So there's a formula
Yeah.
behind. And as what you mentioned, use time
Yep.
to multiply it.
yes.
But you say then you go into a private
Yes.
because maybe private have more strategies behind.
Yes.
Yes.
Absolutely.
Because
Yeah.
like you
so
can
many
you
avenues for
can
you.
you can reprice, you can
Yes.
refinance, you can take out
Yeah.
some cash out.
Absolutely.
You can do something about the
Yeah.
thing. And I think it move up much faster.
Yes, that's the thing that I'm concerned about. For the young people out there, if you play MLBB or any type of MOBA,
But what is MLBB?
Mobile Legends.
Oh, Mobile
Yeah,
Legends.
if you play any type of game, right?
A game, okay.
You want to there's a certain concept of snowballing. A hero which starts off very strong in the early game. That you can snowball and have a level advantage. So this is the advantage that I think I lacked so badly
Oh, I see.
because I wasn't aware, I wasn't literate.
So that is to say, if you go back earlier,
Yes.
if you have some strategy that is
Yes.
probably being introduced to you,
Yes.
then you use the time, start
Absolutely.
earlier,
Absolutely.
compound over the period of time,
Absolutely.
that gets the results that you
Yes.
want.
And of course, the rest of the things lah, party less. When you start early, a lot of the things just fall in place.
Okay.
If you think about, like, for example, my friend down here, right, Ernie, you started early.
Yeah,
Right.
slightly.
It's like,
earlier.
I guess you either spend the time learning or earning, right?
Yeah, right.
You spend time learning.
I
spend-
really spent a lot.
Right.
I look back into the whole spending. We spent probably about near a few 100,000 together,
Exactly.
my wife and myself.
Yeah.
But not in academic stuff.
No.
But in personal development.
Yes. And even in a normal job, you spend time learning or earning also, what?
Yes.
Right? So you spend a good part learning. I spent a good part of my youth doing absolutely nothing. I wanted to use a more rude word there, but maybe not. Yeah. Right? So
But there's always discovery, ma. At
yes,
a certain
that's
age,
discovery.
right?
It's just when you discover.
Yeah.
If you only, like me, you only discover
You
how
think
to,
so.
only in your 40s, it's so late.
So that was the reason why you want to educating the young.
Yes, absolutely.
Wow. But is there any challenge when you start to educate the
Yes.
younger people about money?
Yes. I think the biggest challenge these days is really in understanding what people are consuming at
Okay.
this point in time.
What do you mean by consuming? You mean like what? Swapping TikTok and all this
Yes.
thing?
Even swiping on social media has different levels, right? To me, one of the words last year that we were exposed to and is probably one of the words of the year was brain rot.
Wow.
Can't believe it. Like
Very heavy on.
the literal concept of letting your brain atrophy, right,
Wow.
is something that people are subscribed to,
Okay.
right? And I think it's really telling of our society that you would rather just rot away doing nothing, viewing stuff that doesn't add a single bit of value to your life, than to learn something.
But there's also the society that's happening. Man.
Yeah,
More and more
absolutely.
things. There'll be content creator wanting to get more views.
Yeah, yeah.
Do different things for fun.
Yeah.
And they get the kind of thousands of millions of views. But they also create maybe the other person who's watching it.
Yeah.
I'm not sure what is the main value the problem can
Yeah,
receive it.
I think a lot of people would then argue that,
Maybe it's fun.
I go on social media, I don't want to have a hard time, I just want to have fun. I have a hard day at work already, let me just unwind at home, right? Then,
But I want to share with you one truth that after serving about 3,000 of my community members, and these are a few things that people come into my space. It's usually called Mac truck. We call it Mac truck.
Yeah.
What does it mean? It means that in life, something really happened and hit them suddenly.
yeah,
and it was like the sudden wake-up call.
Yeah.
And it's usually through a few incidents.
Mm.
Example, retrenchment.
Oh, yes.
Yeah, suddenly retrenchment hit them. Wow, I got to do something about it. I
Yeah.
got to do fast. I suddenly feel that everything stops.
Yeah.
So retrenchment is usually one of the incidents. Second, loss of loved one.
Mm.
The loss of loved one is another one that give the immediately wake up call.
Yes.
Then third is after retirement, they don't know what to do and they find that their financial is still shrinking. They couldn't upkeep in terms of the livelihood.
Yeah.
So these are the usually three things that hit most of the people and suddenly overnight wake up. But these are very painful journeys.
Yes. Yes.
But that's where I start to see people go into learning when all these things happen. So maybe we can really encourage people.
Yes.
You don't wait for the Mack truck things to hit you.
Yes.
Then you start learning.
Yeah,
And
absolutely.
because investing and growing wealth creation take not a short time, but it take a long time.
And the longer you have, the better it is.
Yes, it takes time to compound. Just like red wine, right?
Yes.
The produce of red wine at the beginning, not much value.
Yeah.
But after a journey of time, you see the values that it went on.
Absolutely, absolutely. One day it's just grape juice, the next day it's wine. You know, you have to wait for that time. I mean, maybe it doesn't happen that way, lah. But that's the concept.
But then over the period of time when we know that this is important, but what are the most common excuses that people tell you not learning about money?
What's the point? I don't even have enough money.
So they just brush it off.
Yeah, they brush it off. You see, I think, again, another irony of society is money is always on their mind. Especially as a Singaporean Chinese. There's no excuse. Chinese New Year is coming. 恭喜发财. Wish you get rich. No other society wishes has holiday wishes that say, hey, wish you get rich. No way. Right?
Really, man? Really,
I mean, I
Our-
haven't encountered any. It's good fortune, maybe good health, perhaps. Wish you have a good year. No one says, hey, hope you get rich.
Okay.
Right? But we think about money all the time. People complain about money most freely, when people say they have speaking anxiety, watch them talk about money. They complain about money all the time. Not enough money not enough. And movies made about it.
Yeah.
Right.
Correct.
So the key is money. The thing is, money is always on our mind, but we don't do enough about money. Oh, that's a good punchline. Money is on our mind, but we're not mindful about money. Okay. Yeah.
But money topic is also not easy to.
It's
to
not
learn.
easy.
But what do you think about, let's say, maybe the education process? We gone through the
Yes.
education journey, but I look back, I don't remember really about subject talking about it.
Zero. At least our time.
But what do you think that how important is to inject the portion
It is.
into the school education?
I 100% wish that financial literacy would be part of the school curriculum.
Okay.
If not curriculum, maybe even for the children to at least get introduced into it by their parents.
Or like introduce like keywords like what is assets, what is liability.
Yes, or teaching them the value of delayed gratification.
I see.
Yeah, I can give you $1 today, or I can give you 90 cents today, but I give you $2 on Sunday.
I see.
Make them work for their money. You know, that concept of investing only came to us through because we didn't have social media then. You could only get it from mentors.
Yes.
Or books. Maybe. Yeah. But
But now it's much easier.
now it's
because
so much easier.
through media.
Just whether people pay attention to it or not. Some people see good content. And now it's amazing that TikTok has a STEM channel, STEM for science, technology, engineering, and math, right? But still no financial literacy.
but do you think that when people are talking about financial literacy, people just automatically shut down because they think that maybe it's boring?
Okay, yes, I agree with that statement of people thinking that financial planning or financial literacy is boring. But think about it. You want to make money boring in a boring way? Right?
Yeah, I don't mind.
I would love to.
Yeah.
I don't
because
want,
compounding is boring.
yes, compounding is boring. What?
Yeah.
I don't want to get my money all excitable and start losing money very exciting. Yeah, lose money very exciting.
I always say I don't go into this thing called drama hook.
Yes.
You know, a lot of people wants to, every time when, let's say if I'm doing property as investment, I'm running co-living as a business, actually I have a lot of people come and tap my shoulder, hey, buddy, you want to do this business, but it's out of the scope. So I always say, stick to the boring money.
Yes.
Do what you're good in.
Yes.
Don't get into drama hook that is out of the scope.
Yes.
Then you got to restart all the SOP, restart the marketing campaign, redo everything, relearn everything. So stick to where you are and dive deeper into the space.
Yeah.
And then I always say, if you really, really want drama hook, then you go and do bungee jumping, you go and do skydiving. You just have one-time shock.
Yeah.
Then that's it. Then you go back to the boring journey.
I think there are two things that I would never expect excitement out from, nor do I want excitement out from.
Okay.
One, my money. Two, my relationships.
Oh, okay.
No way. Yeah. So anything else, you ask me to watch the most gripping thrillers on Netflix, I'll be happy to watch. Of course. Who would say no to that?
Okay.
But drama in your money? No way.
But what about this generation of folks? When, in terms of communications to them, do you think that there's any miscommunication about how money can be generated?
Yeah. Maybe in all generations, this is also a feature of scams, maybe. It's a get-rich-quick scheme.
Okay. So that's one point that you...
Yes. I think a lot of people fall to scams because they have this... The scammers create a fear of loss. But at the same time, a lot of people also fall victim to scam because there's a pleasure of quick money. There's a promise of quick money, not even a pleasure yet. They never even enjoy it yet. Right? There's the promise of quick money. What comes easy, you lose easy as well. Right? I think that part is really lacking. That communication.
Do you also think that most of the people, the younger one, say that I want to be a social media content provider rather than going to the professional route? Do you think that would that influence them? Most people want to go through that route?
I don't think so. I think there's a difference between, just taking photos on Instagram and then, dolling up, doing a get ready with me kind of video, looking good as a content creator versus really thinking of what you want to share with the society and creating content on it and delivering it. Right? I think it's one thing to just snap a photo and upload. Maybe you spend some effort on the caption. But behind every video that content creators really go through, there's a lot of planning.
Oh, I see.
Sometimes even an entire team is required.
Yes, definitely.
Right? So
I also don't have a pleasure to come and sit down with you without the team.
Absolutely. I think it's not for everyone. But for those people who take it who really see the draw of wanting to share something with other people out there, I admire them. Go for it. But I don't think it should be compromising your future. That's the key difference.
No problem.
Yeah.
But you see, when we talk about financial angles, especially for the younger one, then let's say if one person is going to go into property as a biggest commitment, so what one advice would you give it to them?
So if they are looking at going into property, but yet at the same time they are trying to create content on it, or what do you mean?
Let's say, you see, they in their life, maybe buying property is the biggest amount that they have to spend on.
Yes.
But then, what would be the advice given to them, or what are the things to watch out? What would you say?
I think it's think about the property as not your last property.
Okay, not your last.
That is the key thing. A lot of people it is different philosophies. I think at a certain age, you would be thinking how many more years I have left.
Oh, about your life.
About not just life, but maybe even the snowballing opportunities.
I see.
Right. For me, I probably wouldn't ever go and buy a plus or prime HDB.
Oh, the HDB one.
No way. No way. I'm 44. Next year I'm 45. 10 years later, 55. How many times I can snowball? So no way. Right? So I can't think of that as my last
So first thing, talk about the life journey.
Yeah. Think of
how
the
many
life
years
journey.
can you do?
How many times can you snowball? If it suits you, if you think that I can stay in a place for let's say give it 5 years or 3-4 years, move on to the next place, make a profit out of it, upgrade constantly. I
Because property is a leverage, right?
Yes, yes.
You make some money out of the gains,
Yes.
the amortization,
And-
draw down
yeah.
principal, then you go to the next property,
Yeah.
leverage again.
yeah, and
So
your
you-
outlay is much lower compared to the rest of the investments.
At this point is there's one point I want to highlight.
Mm.
When I speak to people,
Mm-hmm.
people ask me, Ernie, why do you want to move to the next property with a higher quantum, meaning that the values? So I want to highlight to everybody that are watching here. In the events, right, inflation, as I mentioned, is actually the best friend for property. It also means that one day, if I own a 1 million value property, when I grow 1%, it's 10,000.
Yeah.
But if I have a 2.5 million property, I grow 1% is 25,000. And let's say if the inflation is like 4%, it means that every year, 1 million property grow maybe 4%,
Yep.
which is 40,000, but 2.5 million grow 100K.
Yeah.
So the speed of growth is
Yes.
very different.
Yes. And in fact, don't treat that huge commitment as a drawback, a disadvantage. It is not. It is an amplifier, like what you mentioned.
But it also must be kept within
Yes, of course, within your
capability lah.
comfort level, your capability, and what the bank would, the banks are willing to loan to you, lah. Yeah.
I also have cases that some of the folks that meet up with me, their loans is okay, but the down payments, they lack a bit.
Yes.
Lack a bit meaning
That's a common problem.
some of them, they lack about 50K
Yep.
to 100,000.
Yep.
Actually, sometimes I share with them, do not restrict yourself when you have lack of resource. Because in the world, there's abundance of resource.
I agree.
And one of the things that probably everyone that's watching here, if you lack of this amount, right, actually no harms to seek for this thing called other people's money as a solution.
Oh, yes.
Because if the loan is okay, means that you can pay for it,
Yeah.
right? But it's just that the down payment may be slightly not
Yes,
enough.
yes.
Or maybe sometimes you can speak to someone else,
Yeah.
maybe the family members,
Yeah.
and see
Yeah.
whether the 50K and all this thing
Yeah.
can be structured in.
And think about what ECs are doing, right?
Yeah.
ECs, the down payment portion is so big. I don't expect a young couple to have this amount in without tapping on the bank of mom and dad.
Yeah, it's definitely not
Right.
easy.
Yeah.
But you see, when we are coming into the angles where if we're going to into property, right? First thing, look at the timeline. Second thing, whatever things you lack of, actually you are totally fine.
Yep.
You can get resources to
Yep.
help you.
Yep.
But go in earlier
Yes.
and let the times go
Early,
through the
yeah.
compounding journey.
Yes, absolutely.
Very good, very good. Hey, I
Absolutely.
think we have a very nice conversation about all these things. But what would be the one final advice that you want to give to the audience here?
I think there are a lot of people who make decisions based on what everyone else is doing.
Okay,
But you
naming
see-
the surrounding.
Yeah, the
folks.
surrounding, or rather the masses, right? I always believe that if you do what 80% of the people are doing, you get 80% of the results. I mean,
It's
you
like
get-
80-20 rules,
Yeah,
right?
80-20 rule. You get what 80 people are achieving, 80% of the people are achieving.
But what will be the common 80% people you think that they are doing? Let's say in property.
In
let's say.
specific to property, right?
Let's say.
80% of Singaporeans stay in HDBs.
Okay, so what? They save, then got enough money,
Yeah.
then they buy.
Or rather, here's the typical route lah. They start dating in their early 20s. They go out there, they BTO, and then they hope to stay in there for as long as they can.
Okay.
And then eventually maybe they pay a certain amount off and they upgrade to a condo perhaps.
Okay.
Right? Thinking that only one property is their route out of their lower middle class.
So that's the 80% you think that's the...
Yes, I think most people are doing that.
I share with you my thoughts about how 20% of people are doing.
Sure. Yes.
So,
Please.
so the 20% that eventually get 80% of the results, because Pareto rule works that way. The top 20% of the people get 80% of the market
Yep.
shares. And some of the people who I met and we spar ideas,
Yep.
first thing is, every time when you see a good assets class, let's say a property that is really good, actually the very first thing probably we have to ask ourselves is, if I do not have enough resource, then how can I afford it? Break down into the steps.
Yep.
What are the things that I need?
Yep.
And slowly fill in the gap. How can I fill it up? It could be cash problem.
Yeah.
So go and check it out. How can you
Yeah.
use maybe other people's money to come
Yeah.
in? But it doesn't mean that you take other people's money and people
No
just
lah.
give it.
Yeah,
It doesn't work that way.
No.
But it could be maybe structured in a way that, let's say, the parents or the family members pass the cash in, and they maybe structured a journey.
Yeah.
Maybe in 4 years later, we let go, we have some profits,
Yeah,
this
to
thing
give it
passed back to you. But you have the big gain, right?
Yeah.
Then you can move to the
Yeah.
journey faster.
Absolutely.
Rather than
And by then, your
savings.
pay will have gone up.
Yeah, things will change.
Yeah.
Yeah, the determine, the drive, everything will change.
Yes.
And then you push for things to move up.
Yes. I agree. I
Okay.
agree. And that is something that I feel that not many people are willing to do now. I don't know if you're a young person and you are really planning for that. I guess let us know in the comments.
Oh, comments.
Right?
Oh, correct,
You know?
correct. Oh, yeah. If you have any things that resonate you and you feel that you want us to address, happy to do that. We'll do our very best to make sure that we address to your
Right.
points.
I think the key takeaway here is find someone who can teach you something else.
So getting a mentor.
Getting a mentor.
Okay.
Not just a mentor, but even start researching more about the topic.
Okay.
I've heard so many people start a statement with they say. What's they?
Oh, not
Right?
specific enough.
Not specific. And it's just hearsay. Same thing goes for stock picks. Same thing goes for other investment classes, Bitcoin, crypto. Right? They say. I think it's too arbitrary for you to make anything out of it.
I think today we have a great sharing.
Yes.
I hope the younger ones that you are listening,
Yep.
or whichever phase you are in now, do feel motivated and take some actions to make plans for your future. Whichever phase you are in, you definitely have things to do and you can still grow in the wealth creation.
Yes, absolutely.
Okay?
Yes.
All good?
All good.
All right. I hope you have a great time with us and we'll catch you out on the next time. Okay? See you
too.
then. If you enjoyed this podcast, like and subscribe to our channel. And if you have anything related to financial, business, and property journey, just drop a comments below and we will answer them in the next podcast.